Hey guys, welcome to this next trading example video, and we will be covering another ES short on a week outside day with multiple time frame confluence. For this particular setup, we're looking at the bigger time frame high that was taken out on a daily. There was a nice big drop from the area that we're looking at, and the profit potential was quite large to the downside. And just like previous videos we've done in this series, there's a lot of similarities, obviously, and a lot of repeating of what we look for because this is our criteria. These are the criteria that we use in our trading on both a daily and intraday and swing trading basis. So if you're hearing the same things, that's good and that's on purpose, and you should be hearing these same things because this is how we trade. These are the things that we're looking for. So again, it's another short video, another short opportunity, excuse me, on the ES, week outside day on multiple time frames. Let's get right into it. If you have the Derivatives Day Trader course and you need to review anything for this particular example, go back and look at sections 1 and 2 of the Derivatives Day Trader course. But let's get right into it. So, again, in this example, we were looking at a few things. We have our multiple time frames on our multiple charts. We're trading the ES, and we are looking for a short setup. And let's go over why. So, there was a gap down off the daily after the daily had taken out a high. And let me highlight that. So here is a previous swing high. The market rallied up, took out that high, closed higher than that high, but then the next trading day gapped down in the overnight session. So that strong move down and a gap down told us that sellers were present. And we've talked about this in previous videos. When a high or a low gets taken out, the market tends to reverse in the opposite direction, at least initially, giving us an opportunity to take it short in this instance, or long if it was dipping below a low. But again, on the big picture, on the daily, we had the market rally up, strong fashion, take out this high, close higher than this high, but in the overnight session for the next trading day, we gapped down lower, and you can see on the 60-minute that the selling pressure definitely came in. You see a nice big drop. The gap was right in here when the overnight period started for the next trading session. So this area is what we were focusing on for an entry. Okay. There was a nice big drop from this area that we were looking at that caught our eye after a rally up in price, after we had a gap down. Plenty of profit potential to the downside if prices were able to rally back up to this area, close to this 27.90. You can see in this green box, you can see in this green box, the profit potential was quite big. We had a couple areas on this 240-minute that we were looking at as potential targets, stopping points, points where the market may bounce. Ultimately, we thought we can get back down to this 27.40 area. 27.62 was first target. 27.50-ish, 27.45 was our second target. And this was off the big picture time frame. So we have multiple time frame confluence looking for the same thing. Weak market environment. We had a gap down after a high was taken out, and we were waiting simply for prices to retrace back up into this area. Now what this chart doesn't show, what this example doesn't show, is something smaller, a time frame smaller than the 60-minute. You can actually see the level much more clearly defined and the gap on a smaller time frame, but we didn't have that in this particular shot. There was also a wick high on both time frames, higher time frames, a 240 and a 60-minute. And just like this high got taken out with this move up, this high, this pivot high, right in there, was getting taken out as well. So it works on smaller time frames just as well as higher time frames. When an area, a high, a pivot high, a swing high gets taken out, again, you can see that the market likes to reverse. Doesn't matter if you're trying to short or if you're trying to go long. But we use that in conjunction with the overall market with a gap down. The market moves out of this area in a strong fashion. Low of the day holds in here, and we get a rally back up in price. Price had never been back up into this area until our opportunity. You can see in this box, if you will, this was basically a short-term top that was put in, and prices dropped out of this level in a strong fashion, right? So prices had not been back to this area where there was clearly more sellers than buyers until we got our opportunity here on our entry. This little swing high got taken out in a strong fashion after the lows were held. And this little swing high was taken out as well right in here on this strong move. But the bigger picture always dictates what we're going to be doing and what side of the trade we want to be on. So in this case, a weak market environment, a gap down, a strong move down, multiple time frames, we were waiting for a shorting opportunity. Not to say that we weren't looking for longs. And any example that we've gone over in this video series, just because I'm highlighting a trade doesn't mean that's the only trade we took for the day. I'm highlighting these for specific reasons, and not going into every trade taken on these days. These were trades that we want to highlight and specifically cover because it really shows you what we're looking for on a daily basis, right? And we can't cover everything in these videos. That's more for our trading room. If you guys want to hop on board the trading room and trade with us live each and every day, that's where we obviously are taking multiple trades each day for the most part. Some of these trades that we highlight are the trade of the day. Some turn into swing trades and things like that. So we don't really limit ourselves, but just know that there are other opportunities, and there are other opportunities on these screenshots that I'm not talking about. But in this case, we are looking for a short, weak market environment, multiple time frames, swing high taken out, pivot high getting taken out, first time back up into this top where there was more sellers than buyers. Why do we know that? Because there was a push down with an even bigger move down because of the gap. And then we have our green boxes for our profit potential. Big old room to the downside here for our pullback. You have this first target in here, and you have another area down here where we'd potentially see the market stop going down and reverse and go back up. So for our short, these were targets. So the risk to reward was definitely there. The size of the drop was there. Taking out the swing high, taking out this high, taking out these pivot highs, all added to the confluence and the conviction to our trade for this particular short setup. You can see we made some money on the trade, and we were out of the market by the time the screenshot was taken. So, well, hopefully this was helpful. This is just another example. I know there's lots of examples in this video series of shorting opportunities. We like to short. There's nothing wrong with that. But just as many shorts there's just as many longs, and so it just kind of depends on the market environment and what we're looking for. So hopefully this was helpful for you guys. Shorting is definitely a little more nuanced and advanced for some traders, and so that's why I like to cover it more, because you can get an idea of what we do and how to simplify this process and how we can make it simple for you, so you have a better understanding of how to read these charts and profit in both directions. So it doesn't really matter what the market is doing, you still make money on a daily basis. So yeah, hopefully you guys found this video helpful. Again, if you have the derivatives day trader course and you need any help with this example, go back to sections 1 and 2. Other than that, we will see you on the next video.